Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, January 10th, 2019, around 4:05 p.m. Central Standard Time. I hate to say it, but we're going to tie the record tomorrow for the longest period of time that the U.S. government has been shut down, and then over the weekend we will set new records. I hate to say it, but we're nowhere near getting a deal done. I don't understand why the president hasn't invoked his special powers, but there's something behind the scenes we don't know anything about. I heard today that a lot of members of Congress today just left for the weekend already, so there's nothing on the horizon here to solve all that. And as much as you're hearing from Fitch and other people about credit ratings, if this extends itself much longer, could be impacted, and Fed Chair Powell today talking about that, the stock market didn't care. In fact, the stock market rallied with bad retail numbers. The stock market rallied as Fed Chair Powell today also said that he still thinks the balance sheet is too big and it will be substantially smaller. He didn't give time frames or anything, but that's a little bit back offish from when he was talking that they're looking at everything. So we'll see where you go. What I can tell you is the stronger statements by the Fed propped the dollar, dropped the number of the foreign currencies. That you can't argue. That pull-up in the dollar hurt most of the metal markets, and at the end of the day, actually silver was trading lower than that, closer to 1660. As we look at the stock market, that bounce that we talked about on a closing basis continues, with the market up for the week almost 63 points at this point. When we take a look at how many days up, boy, you can see this. It's just been continual, and we're making those patterns where the market just closes higher each and every day. We had an outside day up today. Now, what that means is you took out the previous day's low and high and closed higher. If you were to take out today's low, be it Friday or Monday, it would give me a sign that the market is making a near-term trading top. That does not mean it's bearish. It's a near-term trading top. I'd look for support if you break back towards the 18-day average of closes. And what about the rally? How far? Well, the Bollinger Band is coming down pretty swiftly to meet price. It's already at 26.39. It will drop when the markets reopen tonight. So we'll see. We're only now about, I'm guessing if you look at each day how much it's losing here, it's probably about 10 points or so a day. So it's going to be around the 26.29 level or so. You can't count on it that way because it looks at how the market is going, but you get rules of thumb with it and you learn how to play with that. So trend up, bias up, overbought, resistance falling down to meet price now. When I come to the NASDAQ, it's the same setup. Higher lows, higher highs, still bullish. If we take a look at today's high, we did not have an outside day up. Yesterday's high in the market, 66.41. Today's 41.75. I should have had this arrow back here. I've got eye drops. Honest to gosh, I've got some eye drops in, and I think I'm missing things, but that shouldn't be there. When I come over here, the highs of this day were 23.966. You took that out today, so I am right. That's an outside day up. I wouldn't want to see that taken out. And like the other markets, the Bollinger tops, look for that right in that zone to be the resistance points you get up to. I've been thinking the Russell would get there. I feel pretty good on it. It's crawling at this point to get there, but I think that that'll be your resistance point. So I wouldn't be surprised after this rally that you go into Friday, the market, number one, take some money off the table. Number two, even with these ups, it's not as volatile as it was just 10 days ago. That's very, very important. In the VIX, if it can keep dropping, I look for the first support to be the 100-day average, then the lower Bollinger Band. Now, when I'm looking at the VIX, I'm looking at how many days this market has been under a 20 reading. You got today, you had yesterday, but not the day before. It takes 3 days to convert from being oversold to what I call embedded, at least. The odds favor tomorrow is going to be an up day in the VIX, so it's favoring, at least that's how I'm reading it, that the market will try to see a correction in some of the stock indices. Big break. Now, look at how the yields, but remember, this is all about an inversion market. You've gone from 148.27. When we lost the embedded reading, as you know, I was looking for price in the 18-day average to come together. I've been saying it each day since that occurred. Right here, you were still embedded. You lose it here, and I'm now looking for price in the 18-day average to come together, and there's no question they did it here. It's just missed it so far in the 10-year note. It's knocking on the door. Don't be surprised that it happens. 5-year, I think, already happened. TLT has gone into a downtrend. You now have lower highs, lower lows. The market closed under the 18-day average of closes. It is oversold, though. Any reading under 30 is my threshold that a market gets into oversold territory, but in a downtrend. The dollar index, here's how I'm reading this chart. If you'll notice, the first break, you got down to the 100-day in the lower Bollinger Band. You then slipped through, tried to rally back up, fighting a battle at that average, didn't win it, and today you're back up and fighting right there. So what was support now becomes a bit of resistance. In terms of the momentum of the market, both numbers that make up the slow stochastic are under 20 today. They were under 20 yesterday. That's the second day. They were not the day before. So if this market's not going to embed, the odds are it has to go higher tomorrow. Don't know. We'll find out if that's going to be the case. Eurocurrency, we talked about this yesterday. You went right up to the upper Bollinger Band, 100-day average, checked it out today, pulled back within. First challenge of that often out of sideways action leads to the market having a struggle. Where could it fall back to for support? Well, it could easily go back to the 18-day average of closes as it's overbought. Is the market in a trend? No. The market's got a pattern of a lower low and a higher high, and it got itself in a bit of overbought condition. Wouldn't know what to tell you at the pound other than today. On a chart pattern, you have lower highs and lower lows, which is countered because you're over the 18-day average of closes. The fireworks in this, at least political environment for the British pound, begin next week at the vote of the House of Commons. Every day is just a new chapter there. You don't know what's taking place. In the Japanese yen, I'm going to stick with what I teach. You lost an embedded reading back here. If we take a look, both numbers over 80 right here, day one. Both over 80. Both over 80. 3 days. That was your third day. Then you lose that reading. Watch this. So when that occurs, price and the 18-day average often make a run at each other. That is what is going on. Now, you've had another bounce in it. We'll see if the market can come to that price. Because you went up so dramatic on that flash crash, I would not have expected you just let go all at one time. But I think innately, that's all I can say, within that market, it's a bit more bearish than bullish as to how it feels. Bitcoin today gave up this attempt to get to the upper Bollinger Band. It might get to the lower band. It's now in a downtrend again, lower highs, lower lows. But the bigger picture is sideways action. So you're churning, you're spinning wheels in there right now. In the crude markets, you're still seeing that the WTI is acting stronger than the Brent, still gaining. You're, though, very close to your upper Bollinger Band, and you are overbought. Use some caution here. Same thing in WTI. You're right up to that number. You're overbought as can be, knocking on the door in the gasoline market. In the nat gas, you had an outside day down, and as long as this embedded reading stays in place, that to me is the key. You know, I create hierarchies on charts, and I teach that in the charting course, and that's the number one thing that I keep my eyes on. Now, In our futures trading kit, we cover a lot of this. It's not the same as my charting course, but if you're looking to get involved in futures and want a better understanding, what a great way to do it. We spent a lot of time on this at the end of last year, so it's literally brand new. These are the different chapters that we cover in detail, and this is free, folks, so it's quite a bit of information. When I say exchange brochures, we bring you to the CME group so that you could see all their different brochures, the quizzes they have. I teach you chart patterns. They're important to learn. Technical analysis. What is it? Art, science. We talk about all that through here. You're going to find different areas all the way through that you work with. And of course, if you'll recall, we have a lot of different brochures of our own that we throw in. So that's there. Cause and effect. I'm telling you, this is the year you're going to learn more about cause and effect, because M1, M2, M3, the flow of money through the economy. The Fed's going to be talking about that in 2019. Some of the different, you just saw go by, the pivot point analysis, other ideas on the education from the mercantile exchange. This is a great primer for yourself. So if you'd like to get it, it's free. It comes as a link. We'll give it to you. It's really simple. Give us a call. You go to our website, sign up for it, and our other offers as well. You can click up here. We had our webinar today. If you'd like to go to our website, go there, go into our area with our education and the different videos, and you'll be able to view today's webinar. I'm Ira Epstein. You have a good day.